Hey everybody, so in this video I just want to talk about Costco real quick, and I just want to talk about what's actually going on with price action. So in the after hours, when the numbers actually came out, we saw a strong dump, and then after that strong dump occurred, we're getting this large rebound. So this is just because people are focusing so much on the headline numbers. So if we're going on over to FinTwit and we're just looking at what people are posting here, it says earnings per share is $2.93 versus $3.30 estimate. And then sales was 53.65 billion versus 54.57 billion. So people are focused so much on just these headline numbers, and everybody is reposting this. Nobody is actually taking the time to go ahead and look at the actual statement that came out. So let's go ahead and let's do that. So right now I'm going to go ahead and look at this Costco earnings report. And let's just scroll down a little bit. And right here, this is the key information. It says net income for the quarter was 1.3 billion, which is $2.93 per diluted share, which includes a non-recurring charge to merchandise cost of 298 million pre-tax, 0.5 per diluted share, primarily for the discontinuation of our charter shipping activities. So this is a non-recurring charge. So that means that it's not happening all the time. It's a one-time thing. So what happens when you actually go ahead and add that 50 cents back into the diluted earnings per share? Well, guess what? That's going to be about $3.43. So, what actually happened? Well, if you discount this entire information, well, then we actually beat the estimates. So if we're going over back to FinTwit right here, people were saying, okay, estimate is $3.30. Well, we beat that. But here's the thing, the sales, we didn't necessarily beat that. So if we're looking at where we are in the after hours, we're not up a whole lot, we're up a little bit, but that's probably just because of the mixed earnings results. We didn't quite beat the revenues, but we did beat the earnings per share when we discount that one-time expense. So that's basically the gist of it. So let's go ahead, let's just scroll down a little bit more. Let's look at the actual financial statements. So if I'm scrolling down here, net sales year over year, that did increase slightly. So it increased by about $1 billion right there. And obviously, that merchandise cost, that went up a little bit because like I said, when we go up here, that was $298 that went into merchandising cost from that discontinuation of the charter shipping activities. So that actually got folded into the merchandising cost right there. So this merchandising cost will actually be a little bit lower, if we discount that. Now, if we're looking at net income, right here, it's about 1.3 billion. But like I said, it would have been higher if we discounted that that discontinuation. And diluted earnings per share, last year it was $3.04. But this year it would be $3.43 if we add back in that 50 cents. So overall, if we're also looking at diluted shares outstanding, this number went down just a tad. So you guys can see right here that it's about 444,886. Now this number is in thousands, so this is actually 444.88 million. And then this right here is 444.36 million. So it went down just a little bit. So they are buying back shares. Now, if we're just looking at the assets and the liabilities, well, looking at assets, their total assets actually went up, and their total liabilities actually went down. So this is a good sign. You want to see your assets go up. You want to see your liabilities go down. It's even better if your shares outstanding are going down as well. So here, you got assets going up, you got liabilities going down, you got equity going up as well, and you got shares outstanding going down. So right here, you can see that equity went up. So equity is essentially just the big portion of equity is when you get net income, it goes into an account called retained earnings. And then when you get that retained earnings account, you subtract dividends, and that gets folded into equity. So, right here, equity is a lot higher. It's higher by about 3 billion or so. So this is pretty good. That essentially means that your book value per share is going up. But obviously, a company like Costco, you don't really want to look at book value per share unless all of a sudden Costco is doing very, very poorly and the stock just all of a sudden crashes. That's really the only time that you want to start looking at book value per share. So, overall, that's pretty much Costco in a nutshell. And I hope you guys enjoyed this video.